Hi, my name is George. Welcome to this week's Rational Thinking, where we'll be covering the legal advice that was published on Brexit, the build-up to Tuesday's parliamentary vote on May's Brexit plan, and signs that the US recession could be impending. Last week was a very busy week for sterling in terms of Brexit-related news. On Tuesday, we had the Brexit legal advice published in the Commons, and this came initially after Theresa May showed a reluctance to actually release that advice that came from Geoffrey Cox, who's the UK's chief law officer. Within it was the fairly damning bombshell for Theresa May that under the current deal, the UK would not be able to unilaterally withdraw from the EU's customs union. Following that news on Wednesday, we had a snippet come out from the ECJ about the possibility of withdrawing Article 50 altogether. This was seen as a fairly optimistic sign, especially among investors in the market, as the chances for a second referendum seem to be growing. After that, and into this week now, we've seen the build-up for Tuesday's parliamentary vote on Theresa May's Brexit plan. Within that, we've seen the pressure from her own party to delay the vote, as it seems the increasing odds are that the deal will be rejected. And this throws up many scenarios. It could be the case that she presses on with a no-deal situation, which would be fairly disastrous for sterling investors, or she could go back to Brussels, or if the margin of defeat is significant enough, we could see a general election triggered, which would of course see further volatility in the market. Last week saw a poor week for the US dollar. This came after US Treasuries slipped, which fed fears that the Federal Reserve may pause its rate hike cycle, which we expect to be around 2 for 2019. The 3-year and 5-year Treasury notes, the curve actually inverted for the first time since the financial crisis of 2008. Which again, murmurings that we could see a potential recession in the US further into 2019. This is further emphasized by the fact that we had weak non-farm payroll data on Friday. Consensus was 200,000 jobs to be created, actually came in way underneath at 155,000. And then we also had the détente in trade tensions between China and US, actually seeing the dollar weaken as people fled from the safe haven currencies in favor of a risk-on attitude. This week will be a busy week for currency markets. In sterling, on Tuesday, we have the key parliamentary vote on Theresa May's Brexit deal. It's already been fairly priced in that the deal will be rejected, so we'll be looking out for the margin of defeat and also the rhetoric that will come out and what is the possibilities for next, whether it's going back to Brussels or whether it's going to be a general election, for example. We should also see a repricing of the rate curve for interest rate hikes. On Tuesday as well, fairly busy day, we do have average earnings out for sterling. In the dollar, on Thursday, we have the consumer price index, which is year-on-year data. And on Friday, we have the retail sales data coming out from the US, which is month-on-month. In the Eurozone this week, Thursday is a key day where we'll have the interest rate deposit and the deposit conditions expected to remain unchanged. But what will be interesting will be the press conference and the statement that will follow. And we'll be looking out for signs on the pace of the quantitative easing cut as well. Thanks for tuning in to this week's Rational Thinking. As ever, please remember to like, share, and follow us. Here at RationalFX, we help businesses when it comes to their currency requirements, helping them to manage exposure, especially in the current volatile times that we do see. So you have anything that you wish to discuss, whether it be your requirements or your forecasts for 2019, please don't hesitate to get in touch.